So without any further ado, I'm going to introduce Sabrina Cape.
Thank you. I am somebody who really never expected to get in governmental finance. It just one of those things that kind of happened. And I tell folks I went, through school, and you really don't ever know where you're going to end up and what you're going to do. And having worked with local government now for over 20-something years, I can say it's a great place to be. There's a lot of wonderful people that you meet and a lot of wonderful things that happen. So you are just now beginning a wonderful journey that you're going to have a fabulous time, but you're also going to have some not so fun times too. So this particular area is an area to kind of get you ready for all those different types of questions that you'll be asked centered around financial management. We are only going to hit the cursory, the parts. We can't get into all the details that you may want to get into. So there is a Finance 1 class that's 6 hours, and there's a Finance 2 class that's 6 hours that basically gets into much more level of detail. In your particular county, every county has differing staff structures. Some of you may have a county manager, some of you may have a county clerk only, some of you may have a chief financial officer, where others of you may not. So depending upon how you are structured will determine how you get your answers to a lot of financial questions. But one of the things I can assure you is there will be somebody that you talk to along the way that knows everything about finance. And if you don't believe it, just ask them and they'll let you know that they know everything about finance, right? So there will always be somebody like that. I do not claim to be one of those people. I will tell you, I will oftentimes not give you the answer you want to hear. But I will give you the answer based on my experience and based on my opinion. Financial management has a lot of different pieces, and in the session that you had with Clint right before this, you talked a good bit about your revenue structures and the different types of revenues and where the revenues are coming from. In this particular session, we're going to talk about budget a little bit, and we're going to talk about purchasing some. And we're going to talk about accounting and auditing. So we're going to talk a little bit about each one, and we're going to field questions kind of as we take breaks, throughout the material that we're going to cover. But where do we actually start? Do we start at audit or do we start at budget? How many think we start at budget? How many think we start at audit? Well, if you happen to be a new county just starting up today, you would start with a budget, because the budget is a plan, and the plan is kind of how you are going to proceed. Because here's the reality. At the end of your 4-year term, if you make it that long, I'm kidding. At the end of your 4-year term, financially, you will either be better off, worse off, or the same, which is highly unlikely, okay? So you probably will either be better off or worse off. And if I were to ask you all, I would assume that most of you would say better off, unless you have a plan that you're really wanting to have the county's demise and things to be worse, which I don't expect that out of any of you. So now is when you start the course of action as to building a financial legacy for things to get better. So budget is where it starts. In the process, we have revenues that come in, and when those revenues come in, we have purchasing, which is what sends the money back out. And as we do that purchasing, we account for the transactions that occur. That's what accounting is. So a lot of times people want to get mad at the accountant, but remember, the accountant is the person who is just telling you how things went. Not necessarily, they're not driving the ship, so to speak. And then audit is when, at the end of the year, the auditors come in and kind of close the books, and basically we start all over again. When we talk about the budget process, it's important to know that there are certain things that you are governed by with state law. And you do not want to violate state law. There are some things inside your county that may be stricter than state law, and you are allowed to be stricter than state law. You are not necessarily allowed to be more lenient than state law. So it's important when somebody tells you we can't do that, the next question is, why can't we not do that? Is it because of something locally we have adopted? Is it something in state that that's causing us not to be able to do this? Tell me a little bit more about why you're saying that. But the code sections 3681.3 is what governs the budget part. And basically what it does is it really isn't very specific about the budget process. A lot of times, though, elected officials and staff people want to think that the budget and tax adoption are one and the same. They do go hand in hand, and they are very, 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 very much related. However, they have different laws associated with them, and they have different paths associated with them. For example, in state law for the budget, you are only required to have one public hearing to get citizen input. However, if you were going to do a tax increase, a millage rate increase, a tax increase, you would be required to do 3 public hearings. So it's a different set of rules that you have to follow. Although you necessarily wouldn't want to adopt a budget without knowing what your taxes and your millage rate were going to be. That's how they kind of go hand in hand. In the budget process, everybody wants to tell you what to include in the budget. And everybody wants to tell you what to cut. But one of the things, if you haven't already learned it, is it's extremely important. Services are so important to people that people get very emotional about those services, especially when those services are being threatened to be cut. And oftentimes, services are one of those things that people do want, but sometimes they don't necessarily want to pay for. So therein lies the struggle, trying to figure out what services you can do. Because one of the other things that I think you'll probably learn in elected office is you can't be everything to everybody. There's only so much that you can be based on the limited resources that you actually have. When it comes to the budget process, you do create a document that kind of has what your revenues are and what your expenditures are going to be. But the process that you go through in the budget setting process, the process is really more important than the document. And here's why. Because you're having communications, you're learning, you're trying to understand what departments are actually needing, and you know that you only have one pie that has to be carved up into all these pieces in order to give people what they actually need related to services. When it comes to budget adoption, after everybody wants to give you, they may bring into you budget requests line by line telling you what they would like. They may come in and just tell you details about the capital equipment they may need in order to do operations. And you've got to assemble and digest all this information about your departments and your constitutional officers that come in and present information. The budget is actually adopted, and it must be adopted by the first day of your fiscal year. Now in Georgia, we're about a 50-50 split between June 30 year ends and 12/31 year ends. If your year end is 12/31, right now the budget is almost finalized and it's almost about to start to take effect January 1. If you're a June 30 year end, then what you find is that you will start to work on the budget process maybe in January, February, or March in order to get it completed by July 1st. You have your own year end. The state does not dictate when your year end is. That has been set locally. The most important thing as you get your budget adopted is making sure that you are getting periodic reports in order to monitor budget to actual. to see if you are staying on track throughout the year. Now, some of you may find it hard to believe, but there are some jurisdictions who do not get monthly financial reports. So it is extremely important that you get reports to where you can compare budget to actual to see if your spending and your revenues are staying on track. So how many of y'all have seen a copy so far of your monthly reports? Has anybody in here already seen them? And are you starting to understand them and sort through them, or with the first time you saw them, did you feel a little bit overwhelmed? Because it was a lot of paper, or it was pretty thick. When you start to look at these monthly reports, keep in mind, elected bodies should focus on summarized information first, and then should go down to the detail when you have questions or concerns or problems. If you start in the detail and go to the summarized part, it will be a little bit more overwhelming. So oftentimes the way your monthly reports will be laid out, they'll be laid out by fund first. The general fund, the SPLOST fund, it might be a grant fund, or it might be some of your special funds related to your courts or related to your sheriff. So they're typically laid out by fund first. Then the general fund is subsequently broken down into departments. So you may find that general government is an overarching principle, but then it might be that you see the manager's office, or you might see the Board of Commissioners office, or you might see planning and zoning. So you're going to see it department by department. And then inside the department, you may see line by line. So that is what you most likely will see. In the state of Georgia, we use the Uniform Chart of Accounts. So that means that basically county to county, what's included in a category are virtually the same. That's why we use the Uniform Chart of Accounts to get consistency between county to county. But those monthly reports that you're getting are basically they're going to be monthly, looking at the month, and then they may be year-to-date totals to give you cumulatively what's kind of happening in the year. It's important that you get these. When you went with Clint was in this room right before this session, you talked a good bit about revenue structure. You talked about property taxes. You talked about insurance premium taxes, local option sales taxes. It's extremely important that counties work as hard as they can to get the slices of their revenue pie as equal as they can. Now, there are some counties that have an easier time generating revenues than others. So some of you have more local option sales tax, where some of you rely more on property taxes. The key is trying to get as many different types of revenues that you possibly can, and the reason you want to do that is so that if something happens to one of those revenues, you're not hurting as badly, and that's why you want to get as much diversification as possible. Now, if you don't know kind of how your revenues stack up, so to speak, where do you go? Well, the budget document will tell you kind of what the plan is for the revenues, but if you want to know what your revenues actually ended up being, the best place to go to is your audit report. Because your audit report, you can look at the general fund and you can see the sources of the revenue and you can see where they come from if your audit report is detailed. If your audit report isn't detailed enough, then the budget document should be the next place that you kind of go to find out your best sources of revenue. Let's take a couple of, anybody got any questions so far? Okay, hang on just one second. We're going to get a mic, okay? I don't want to run you to death. There are 8 months. You're saying different months?
You mentioned January, July.
Right.
There are 6 other
That is true, and normally the reason we don't mention those is just because they're unusual. The majority do fall in December and June, although there are other months. There's March and there's September and there's August, and Dave is absolutely right. There are others.
Van Baker, Lamar County.
Yes, sir.
I'm assuming that there's some sort of standardized software that everybody's using?
No.
There is not. Wow.
That would be a big assumption right there. No, I'm just kidding. There are various softwares that folks are using, and there are some counties that are using the same software, but there are other counties that are so there's probably, I bet if we were to take a poll in the room, how many of you know what software you're wearing? How many of y'all know what software you're using? Okay, I only got a couple that even know. Can you shout out what software you're using?
Peachtree.
Peachtree. Who? Chalkboard. I don't recommend. Chalkboards. Chalkboards, that's a good one. There are different accounting systems that can meet your needs. Here's what you want to be careful of. A lot of times in software, people will buy lots of bells and whistles without necessarily having staff in place that can implement and uphold bells and whistles. So a lot of times if you are maintaining just a checkbook and you are not using a purchase order system and you are not using other things that softwares provide, you will find that there will be softwares that will meet your needs, the Peachtrees or the QuickBooks or whatever the case is. But if you are doing other things, like you're wanting to use things for your occupational tax, if you had that, or if you're wanting to interface with like your tax commissioner directly, then you might have to have a higher level piece of software that kind of interfaces and does those things. But when you get those pieces of software that interface, you've got to make sure that you have staff that are adequately trained on how to do those things, because it's not quite as simple as sometimes it might sound. So there isn't a standardization. There is a standard uniform chart of accounts, and there are some standard processes and procedures that can be shared, but there's not really a generic software that everybody's using. Okay? Any other questions so far, other than the chalkboard? Understanding services. This is where a lot of discussion centers on services because there's a lot of subjectivity to it. There's a lot of subjectivity to what types of services you provide and what level of those services you provide. There are discretionary services where you have more latitude and leeway on, and there are services in which you are required by law to provide. But even on those services that you are required by law to provide, there is still ambiguity. There's still gray. So how do you decide what to cut? Well, the textbooks will tell you that across-the-board budget cutting is the worst form of budget cutting there is, because it ignores priorities. The budget books will also tell you that you are to base things on priorities. The biggest issue we have is trying to figure out the best way to establish what those priorities are, because my priorities and your priorities may not necessarily be the same. Let's do a little exercise, okay? Everybody take a pencil and paper and not shout out anything, okay? I'm going to just list a whole lot of services, okay? And I want you, as I happen to say one of them, I want you to list your top 3 that are most important to you as a person, not as a county commissioner. Take that off. You as a person in your daily life living in the county. Okay, everybody ready? Okay. Court services, fire protection, police protection, patrol, animal control. Help me, Dave. EMS, 911, thank you. Rec department, recreation department, library, health services. You've been thinking about this. You're cheating. Okay, what? Public Works. How in the world could we forget Public Works? Roads. Okay, we'll stop right there. Indigent care for the hospital. Okay, we'll stop right there. Now, what I want you to do is I want you to lean to your left and lean to your right and see if your three match up with their three. Real quick. To your left or right or behind you or in front of you. Real quick. Okay. Woo! Chorus director. Okay. Woo! Now, did you match totally? If you did, y'all were cheating. Okay, I just want to make that clear. So, priorities are different between the two of you sitting there as personal folks, not necessarily as county commissioners. Now, what is your population inside your county? That's how many different opinions you have about the priorities of services, right there. So that is why it is so important during the discussion to try to reach common ground on priorities so that you are not ignoring things that are important to the majority of people. But one of the things that I'm sure you've learned already is as a county commissioner, you will not make everybody happy. So these services, the discretionary list is still on the website, I think, of ACCG, and there's a listing there that gives you the services and the code sections of the law that are related to those services. But again, as I mentioned, they are very gray about the level of service. So you want to take a look at that and decide. Now, some of you have come to office with some preconceived ideas. And some of you are planning to cut something just because it's a pet peeve. And that's okay. But as you go to cut services, oftentimes there are a couple of questions that are asked when services are cut. Legally, are we required to provide those services? Legally, if we're not required to provide those services, how many citizens are impacted by cutting the service? And is there a repercussion of cutting those services? Will some other action happen as a result of us cutting this service? Will we feel it some other way? Those are typically some of the things you think about as you look to cutting services. Now, has anybody in here already thought about some services that they want to take a closer look at? Not necessarily they want to cut or abolish or abandon. They just want to take a little closer look at it, okay? Does anybody, would they be willing to share what that service is? If you would, raise your hand if you'd be willing to share. He would share.
Let me hold it, please.
We just had to let you wait on that mic.
It's recreation for our kids in our county. It's atrocious the way we don't have.
What you don't have.
We don't have anything. We don't have any funding set for it. We don't have anything in the budget for it. Our churches have to do it. And it's terrible. And that's going to be my main thing to get on the agenda.
Okay. So let's talk just a second about recreation, since he was willing to share. Recreation, what are some of the things that you consider when you start to look at recreation services? You're hoping that your goal in recreation and spending money in recreation, wait a second. You spending in recreation will promote a positive environment to keep kids engaged. In school, out of trouble, keeping them engaged. Okay? So a couple of considerations for Parks and Recreation you would think about is who's already doing it, what will happen if you get into the business, will you find partners or will those people abandon, are people willing or able to pay for recreation, is this a service that can be sustainable? Meaning, once you get into the recreation business related to programs, whether that's Little League or basketball or whatever the case is, then the question becomes, are you going to be able to keep it up? Are you going to be able, if the general fund decides to spend $50,000 a year to make this work, are you going to be able to spend that $50,000 for the next 5 years and make it work? So those are some of the considerations, for example, that you would think through if you're looking at that particular service. So as you go through your thought process, you might want to think, those are just some of the areas to think about.
You're still asking for cuts, Jasper County. We found in our budget that we are spending more on animal control than we are on our kids. And our kids are the future of our county. And so we're going to try to cut out some animal benefits and give it to the youngins.
There are just some things an instructor can never respond to. Okay? Questions or cuts, things you want to talk about?
Billy Zorn, Urban County, right on. I want to know who determines what is essential services in each county. Does the state do it, or would we do it as a commission? Who actually determines what I would consider essential services?
There is a listing that's been put together because this has been coming up so much, and basically that listing provides the code sections of the state law that are required for you to do these particular services. So to answer your question, the services are defined that are required by law are defined in the state. And the essential services listing is just a tool or a resource to try to help you zero in on some of those. Does that make sense? And Dave, I'm going to let Dave speak.
I just want to say that I have a printed copy of that list with me. So if any of you want to come by after, I'll be glad to show it to you.
Thank you. Okay? Okay, one more, Miss Catherine.
I was going to say, Richard from Lincoln County, be careful.
Wait a second, I'm sorry, we can't hear you. Shh. You are just such a big group.
On recreation, be careful, like swimming pool, it's just a big hole, it's an expense, but be careful who you name these projects after, because sometimes you never can take that back.
So recreation is an area, like for example, when you start projects, whether it be swimming pools or whatever, you basically, you are making a commitment. So whenever you make infrastructure commitments, you are making a commitment to keep it up, you're making a commitment to stay in the business. So you want to not enter into any of these discussions or agreements lightly as you go forward. So services, trying to understand them. Making sure you understand who you are funding and what you are required to fund. Because a lot of times governments will continue to fund things just because we've always done it that way, as opposed to asking, why are we giving money to this? Why are we supporting this? What are the citizens of the county actually receiving in return for this service? So those are some of the questions to be asking. One of the questions that, as you enter into your budget process, the best budgets let the revenues equal the expenditures and not rely any on your savings to survive. Just like at your house. It is best for you to live off of the revenues that you take in with your monthly or weekly or bi-weekly paycheck. When you start pulling money out of your savings account and when you start pulling money out of your retirement accounts, you are creating a situation that is not going to be sustainable. You've got $100,000 in your retirement account, and every week you take out $5,000 to live off of. In 20 weeks, guess what happens? You better go back to work. So what happens is, as we look at fund balance, we have to start to think, fund balance and cash are not the same. Just because you have cash, it means nothing. Cash is only as relevant as who owes you and who you owe. Everybody take out a pencil, we're doing a math quiz. This will be the most complicated math we do all day. You have cash of $500,000. But you've got taxes receivable of $700,000. But you owe your vendors, accounts payable, $1 million. How much cash do you have? How much cash? 500,000, right? But how much fund balance do you have? 2. You are dependent upon those taxes receivable turning into cash to pay your bills. Now, here's the deal. Those set of numbers that you just looked at, I bet you 10 to 1 that county has a cash flow problem. Why do they have a cash flow problem? Because they've got less cash than they do in receivables, and they owe more people than they do cash. So I oftentimes get these questions, why do we have such a hard time with cash flow? Well, the reason you have such a hard time with cash flow is your fund balance has to be higher to get you through the harder months. What are the harder months for county governments when it comes to cash flow? Any month, right? But what it is, we get all excited in December, right? And we're still pretty good January and February. But when we kind of hit, I would say May, somewhere in May, April, May, June, if our fund balance isn't strong enough, we feel it. Now, if you ever see, and I know you think this is stupid, but if you ever see a fund balance in brackets, Houston, we might have a problem. That means you are in a deficit situation. Now, fund balance does not get better overnight. Fund balance gets better because revenues get better, collections get better, and expenditures decrease, or either somebody very wealthy gives you a lot of money, right? Which doesn't happen to occur very much. So how much is enough? Finance folks will tell you we want as much fund balance as elected officials will let us keep because we are trying to protect you. We are trying to plan for emergencies. For example, you've got a SPLOST referendum, special purpose local option sales tax. You're planning on projects for $20 million. your collections end up coming in at 18 million. You either don't get to do the projects, no, you're going to have to figure out where the money's going to come from if you're going to finish those projects. And the only place that it's going to come from is what you have built up in the general fund. So fund balances are designed for operations, but they're also designed to build up so that in the event you need them for capital to help you in situations, you have them. Because keep in mind, if something happens to you financially, there's not going to be somebody who comes in and bails you out. You will be responsible as a board to figure out the plan to improve the financial condition and to move forward. And remember that Finance 2 class I was telling you about, you bring your audit with you and you go through how to read it to make sure you completely understand it. The worst mistake that county commissioners can make is close the audit, stick it on a shelf, don't look at it, and then basically say, well, so-and-so was responsible for that. That's not true, because the county commissioners will also be responsible if financial operations do not go as planned. But what are people really have in fund balance? Well, in Georgia, we've got some counties that have a year's worth of fund balance, meaning if they've got a $12 million budget, they've got a $12 million fund balance. We've got some jurisdictions that are in a deficit situation. We've got some that have 3 months built up. So what do people say? In my opinion, what is reasonable is 3 months. So if you've got a $12 million budget, $3 million is a good fund balance for you to have. But if you have historically been a struggling county financially, 3 months may be unrealistic for you. So the key is your fund balance getting better every year without you borrowing money? If you've been borrowing a tax anticipation note, the way you tell if things are getting better or worse is how quick do you have to borrow that tax anticipation note, and how long do you keep it, and how much are you borrowing. That is a direct indication of what is going on with your financial issues. So those are things for you to kind of keep tabs on and to say, and that way you can see if things are getting better or worse or staying the same. But fund balance, if you are a county and you are really, really dependent on one revenue stream, you want to try to get your fund balance up a little bit. But if you're a county and you're kind of got multiple revenue streams and you can kind of get multiple ones coming in, then you may not need as much fund balance as another county. So those are all considerations to think about when you think about how much you should actually have. Do you know right now, if you know how much fund balance you have, raise your hand. If you don't know, how do you find out? You go to your audit, you go to your general fund balance sheet, and you look in the equity section, and it will say unassigned fund balance. Unassigned fund balance. And that will let you know what you had at the end of that last audit. Now, it could have changed a little bit, but that's what you have at the end of that last audit. Any questions about fund balance? Okay, anybody else? She's coming. Well, they have to wait.
Is there a rule on debt service, how much debt a county can have?
Is there a rule about debt? The state law is very lenient about how much debt you can have. Very lenient. And I would never recommend that you have as much debt as the law allows. But the law allows you in your general government to have 10% of your assessed value of your digest, which is a very large number. The state law on debt, the question was, how much debt can you have? You can have 10% of your assessed value of your digest. That is for long-term general obligation debt that you go to the bond market and you go to the voters to approve that debt. Now, on a tax anticipation note, you are limited to 75% of your prior year taxes, and a tax anticipation note must be repaid by December 31st, regardless of your fiscal year end. But the long-term debt is a very high number. Okay? Question?
I really have a question. You call it a tax anticipation note.
Yes.
We borrowed, we got a line of credit from our bank for 4 months. We had to start using that money the 1st of September to finish out the year.
A line of credit is oftentimes what they are called, like your bank will actually call them, but technically they're typically a tax anticipation note.
Yes, it's
Typically.
same thing, just worded differently.
Just worded differently, and you're paying interest in the short run.
How can I convince my commission that we need to have a contingency fund?
Well,
That's what I call it when
What-
fund balance is the same as your.
they're a little bit different on a technicality, but basically here's kind of where you start. The first thing you do is you try to get everybody to agree on setting a policy on what you want to try to get your fund balance up to. Because you can't eliminate your borrowing of tax anticipation notes until your fund balance gets up and you generate some cash flow. So once everybody agrees that it's going to be 3 months or 6 months or 2 months, and that's what we're working toward, and everybody's working toward that goal, then when your fund balance gets up, you'll eliminate your tax anticipation note just by design. So the key is getting everybody to agree on what they want to work toward the fund balance and then making decisions daily that will get you there, meaning curtailing spending and trying to aggressively pursue revenues, collections, anything that's owed to you, anything that's self-reported to you, really being aggressive after it.
On the question of 75% of the ad valorem taxes, are you referring to the amount billed this year or previous year, or the amount collected previous year?
It's 75% of your previous collections of the prior year. Yes, ma'am, sir.
Sabrina, when you said 10% of the assessed value could be in long-term debt.
General obligation debt.
In general obligation debt, okay. So that would not preclude a system from, say, Splost, going ahead and selling bonds there with the intent of paying those from Splost receipts, would it?
No, it would not. The 10% law that is actually there is there for those purposes like Splost, for
Okay.
example. The danger that you get into with debt funding Splost projects is what some counties found themselves in is they went ahead and bonded out or debted out 100%, and then collections didn't go the way they were supposed to, and now they're having to pay that debt back from the general fund. So when you do bonded projects, oftentimes I try to advise folks to stay in the 75% range. And if you go higher than the 75% range, to really make sure you have a very detailed strategic plan on that Splost and that you know your numbers are really good. Because that can it's a good thing if you're very disciplined and very structured. It can really work out for you. But you just want to make sure that you don't make the mistake of borrowing too much and then having to figure out how to pay it back. Because there's no more Splost, and then what ends up happening is oftentimes people have to raise taxes or other revenues to get it. Okay, question here?
It's me again, Margaret. You've given us a lot of good advice. Now, I've got a question, serious question. I'm sure everybody in here is wanting the answer to it, too. How, as we, as rookie commissioners, going to try to figure out a way to balance the budget or to cut some things? Please.
How do you figure out how to balance or cut? Basically, there's a couple of things that you have to look at, and you have to make some pretty hard decisions sometimes. The first question is, what are you not legally required to provide? Number one. If you are not legally required to provide it, then it's more up for discussion, so to speak, than something that is legally required. The other thing that you look at is you look at all of your revenue structures and your fee-based structures. You not only look at property taxes and the millage rate of property taxes, but you also look at every other fee that you charge to determine if the fee that you are charging is appropriate. If you have recreation, determine that that recreation fee is appropriate. If you have planning and zoning, make sure that that is appropriate. However, on planning and zoning and things that are regulatory in nature, the law states that you can only charge revenues to the extent of what it costs you to provide the service. So you cannot charge whatever you want to charge, so to speak, for planning and zoning or any regulatory fee of that nature. So when you look at balancing the budget, you got to look at both sides. But oftentimes when it comes to big cuts in a budget, and when it comes to big cuts in a budget, personal services has to be explored, because that's an area that is a big expenditure for county governments. And it's oftentimes one that is very difficult to look at holistically, but if you're making big cuts, that's one of the areas you have to look at very, very closely.
Sabrina, can certain authorities can constitutionally incur debt, right?
Yes?
I'm finding that oftentimes, can you not hear me?
They want to make sure they can hear you.
Certain authorities are authorized to incur debt. I'm finding that a lot of times it's a little bit innocuous with regard to discussing the budget, looking at the service fees and that sort of thing for that debt, and that can be very sizable.
What kind of debt, may I ask?
Utilities authority.
Oh, okay. Go ahead.
So if you've got this utilities authority debt, not saying that we do, but if we did have this huge utilities authorities debt that we go ahead and incurred years ago because we thought something was going to happen that didn't, and then we find ourselves in that situation, how does that consider with this this general obligation debt? Is that still part of that same equation, or is that a different set of rules?
If it is, if you are paying utility debt and you're paying it out of your general fund, chances are somewhere along the way somebody collateralized it with your tax digest. So if they collateralized it with your tax digest, then it's part of your general obligation debt and your formula. As far as commitments on that debt, if the county is not on the debt, they may be more politically committed than legally and financially committed. So there's different levels of commitment related to debt. So it's important to always understand, are you legally committed, or is it you are committed because you said you would do something? So if it's a legal commitment of debt, what happens with debt is you are changing your financial independence once you enter into that debt. And unless you can figure out a way to restructure that debt, most of the time you may be stuck with that debt until it subsides. So restructuring may be the only option you might have, possibly. I might go back here.
Yeah, Sabrina, I've been in this rodeo for over a year now, and all I can say, you better strap your saddle on tight. But I haven't heard anybody mention about how important it is to keep a reserve, and because the unexpected expenditures are going to be there, and that's something you don't want to overlook. So the gentleman was talking about cutting out some stuff. You better watch what you cut out, but you better also remember to keep a reserve.
That's a very good point, and let's talk about that. We talked about fund balance, and let me just say, when people say reserve, everybody means something totally different, okay? There are cash reserves and there are equity reserves, and you want to have both. Equity reserves means what level of your fund balance you want to keep. 3 months, 6 months, 1 month, 8 months, 10 months, okay? Cash reserves mean what do you want to keep in cash to pay your bills. And most of the time, cash, what you want to keep in cash, is enough to pay your bills for 3 months. That's typically the rule of thumb, 2 to 3 months. Now that is very aggressive, but that is what you want to strive for. As you are looking at a budget process, inside the budget, you do your revenues and you do your expenditures. Well, in your expenditures line, there will also be a line for contingency. And that is another built-in reserve. As I say, people, when they say reserve, they mean a lot of different things. So you're really trying to keep your cash up, you're trying to keep your fund balance up, and in your budget, you're even building in a contingency. Well, here's what happens. The year goes great, you didn't have to use that contingency, your fund balance goes up because you didn't spend as much as you thought you were going to have to spend. That is why if you want to build your fund balance, you want to make sure you build a contingency into your budget so that basically, hopefully you won't use it, and then when you don't use it, your fund balance gets better. That's a mechanism that we use to try to get our fund balance to get better. So, but everywhere you can inject conservatism in spending and conservatism in reserves, the better off you will be if you have financial hardships. The governments that prepared themselves and had strong fund balances going in to this prior few years are still doing okay. The governments that didn't have any reserves going into a downed economic time are struggling probably the worst. So that is why that fund balance is there. If you live on the coast, you prepare that fund balance in case you have a hurricane. If you live in a tornado-stricken area, you prepare that fund balance in case you have a tornado. You prepare for the emergencies that could happen and potentially happen. Questions? Okay.
You were mentioning personal services, cutting of personal services. What comes in under personal services?
Personal services, as far as the uniform chart of accounts is concerned, are salaries and benefits associated with those salaries. There are certain things like FICA and Medicare tax, those come in under personal services. Retirement. Work comp insurance actually comes in under personal services because it's tied to your salaries. Health insurance and any other insurance benefits that you provide to county employees or their retirees. So those are the items that come in under personal services.
Yeah, but health insurance this next year is going to be a killer because the new health law is coming into effect and we're going to have to dig deep.
Health insurance has been an ongoing struggle for counties trying to figure out what to provide, how much to provide, how does it impact you competitively. It's been an ongoing struggle and will continue to be, and will continue to be. Retirement will be another one that will continue to be a struggle for counties to try to figure out solutions to provide. There.
I'm Kevin Coker from Baker County. As we put out a budget and the people submit their budgets to us, in public safety, we're having a recurring overshot of their budget, just missed planning or whatever it is, and shot over 68,000 last year, and they submit the same budget. So, to tell you the truth, it's going to go over 68,000 next year too, most likely. Had to do it unanticipated, the anticipated tax income to pay the overage this year on public safety. And our sheriff was here yesterday, not our sheriff, but a sheriff was here yesterday, and that seems to be the area we're struggling. I don't know about everybody else. But is there anything we can do? We can't do it legally because if we stop public service, then there's safety issues and all that. Is there something we can do to keep those departments in line on their budget?
Do you use a purchase order system currently?
Yes.
Do you actually put those purchase orders in the computer and basically don't give the purchase orders if they're over budget?
Well, refused to, what we do? I mean, what they did was they didn't buy a car that he wanted, but that's about it. But hiring personnel, say you hire twice as many deputies as he had.
So
they're
it's
on
more
payroll.
in the personal services area and instead of the operations line items? Is it more in the people or is it
People.
all across?
Probably
It's in the people.
payroll.
A lot of times, let me tell you, one of the things I find in public safety, and I'm not defending your sheriff, I don't know the circumstances at all, but one of the things I find in when I deal with counties is who is doing the computation for the budget for personal services, because there are oftentimes errors that are made on the part of staff in calculating the personal services, which are creating many of these overages. And the reason that they're not caught is because the same person who prepared it the last year and prepared it this year, it hasn't changed, but the actual number is higher. Those are oftentimes because certain things aren't put into those calculations, like shift, as far as calculating the hours, or overtime is oftentimes not put in those calculations. So if I were having a overage problem, I would try to isolate kind of what area it was occurring in and try to isolate and really try to zero in on that calculation and make sure that the calculation is accurate, not that the calculation's one thing and what happens is another, but maybe the calculation wasn't right to start with. And that does tend to happen a lot. I mean, not a lot, but I see it a good bit, actually. But does Dave, do you want to speak any about controlling of spending, expenditures of constitutional officers? I can't really see you, so I'm just having to see if you're nodding yes or no. So
Get out here in the light.
there you go.
There was a county in Georgia where a sheriff was overspending his budget by gross amounts, and the county commission took too long, in my opinion, to do anything about it, notwithstanding that I had made the recommendation that they get it under control. And they eventually filed for a writ of mandamus, which is going into a court and asking the Superior Court judge to order the sheriff to stay within the budget. I actually have a copy of the court order with me. I take it with me in all the travels I do around the state. It did not go beyond Superior Court, so there's nothing that you can hang your hat on, but I'll tell you what it said. The judge said that the writ of mandamus was an extraordinary remedy for which the county commission already had a remedy. And he said, don't pay his bills. And if the sheriff takes exception to not paying his bills, he can then seek a writ of mandamus against you. And they quit paying his bills. He was not complying with the purchase order ordinance. He was buying patrol cars with no budget. He was hiring employees with no budget. But they got it under control for the most part. There's still some issues there. I'll give you a personal example of how I think you can control this, even if your sheriff refuses to comply with your purchase order system. As long as you're paying the bills out of the commissioner's office, out of the administrative office, you can do what I did. I was county commission chairman in Webster County. We had a purchase order system in place. We did not encumber funds, but we used the PO. And I got a bill from the Ford dealership, and the clerk brought it in to me and said it didn't have a PO. I said, thank you, and I laid it on the desk. When it was past due, the vendor called and said, we'd like to get paid. And I said, well, yeah, I've got the bill. But you didn't have a PO. And they said, well, are you going to pay the bill? I said, I'm not sure. I'll think about it. And I laid it back on the desk. About 2 weeks later, I got a call from the vendor and said, we sure would like to get paid. I said, I'll tell you what, I'll make you a deal. I'll send you a check. Never send me another bill without the benefit of a PO because you will not get paid. The next time that a deputy drove into the dealership and said, I need my car repaired, they said, where's your PO? He said, I don't have to have one. They said, you might not have to have one, but we do. And I got control of the situation. There are various remedies like that and strategies that you can use. I highly encourage you to try to work with your sheriff and your other constitutional officers, but at the end of the day, they don't have authority to exceed the budget that you establish. But you have a responsibility to set that budget at a level that allows them to carry out their duties. There's no fine way to describe that. It takes communication and cooperation, but you can get it done.
Thank you. I think they like that story.
So, if you just add some knothead commissioners, and I'm taking this to the extreme for a purpose.
Wait a second. Thank you. Go ahead.
If you had some incompetent commissioners who let their county basically get insolvent. I mean, if it was a corporation and you overspent, you couldn't pay your bills, your shareholders, you know, you're going to go out of business. At what point, and who would it be? The Attorney General? Who would be calling that county and stepping in and saying, enough's enough, we got problems?
In Georgia, we do not have what's called a receivership, which basically means somebody steps in and takes over. In other states, there is a program in such a way that if counties or cities get into a situation, the state steps in and takes over financial operations. So every year, if you are in a deficit situation, there is a big bold note in your financial statement that says you are and why you are. And when you get your audit back from the Department of Audits where they've looked at it, there's actually a comment that says you're in a deficit situation. But there's no action that's taken past that other than at the county commission level. Now, if you were to go for funding or different things like that, you might not get approved in that situation. But I've never seen a situation where they kind of step in and take over. So, but Dave may know something I don't know.
No, it's not to contravene anything you said, but twice, I've been with ACCG for 4 years, twice we have received a call, once from the governor's office, and I've received one personally from the Department of Audits and Accounts, and in both times they recognized severe financial problems and asked us to get involved. And in both cases they had negative fund balances which had been growing over time, indicating that the problem was getting much worse. So in both of those cases, and you were involved in one, then we took a team of people there and worked on those problems for those counties and wrote reports that ultimately led to action. And I mentioned two because the governor's office and Department of Audits, a third one came to my attention as a result of a county commissioner making the request, and Tracy Arner, who many of you have met here, she and I wrote a report for that county. So we can get involved and help make recommendations.
And in my experience when I was here full-time at UGA, we did visit many counties and do those reports based on those requests. But they're really, all our role was to make recommendations, and it kind of stopped at that point as far as, my role was really to make recommendations, and then they had to take it from there. Let's switch gears just a second and talk a little bit about purchasing, not a whole lot, but just a little bit. The first thing I want to say is perception, perception, perception. People are watching what you do, how you say it, who you say it with. Be careful where you talk innocently about things. It can be misconstrued and taken out of context. If your county doesn't have a written procedure for when you get written quotes, when you do sealed bids, then you should really work on trying to establish that so that there's some uniformity. Because you want to make sure that your county is getting the best service for the best price. You will not necessarily always select vendors based on lowest cost. You'll select them based on timeliness, quality of service, various things you'll select them for. But you want to make sure that you understand what your relationships are with these vendors. And just like Dave was mentioning, you want to make sure they understand how they're going to transact business with the county. And that you want to build relationships with them. If you do have a local vendor preference, meaning you want to deal with people inside your county, then you can establish that inside your purchasing policies and procedures. But you just want to make sure you know what those policies are. If you don't know what they are, you want to look at things to improve them a little bit. And you really want to be very careful about perceptions because people will misconstrue intentions. And all of your relationships that you have in your personal life, people will be looking at those personal relationships, making sure that you are keeping all things competitive and above board. The last part we're going to take a look at a little bit is on your audit. Your audit, you are required annually to have an audit, and it is a financial audit. That financial audit means that it looks at the county's financial picture to be materially right or correctly stated. You select your auditor. The state doesn't select your auditor for you. Your auditor and you work out a schedule. Your auditor and you need to have your audit into the state of Georgia 180 days past your fiscal year end. So if you have a December year end, that means June 30th is when it needs to be there. If you have a June year end, that means it's got to be there in December. And basically, there are a couple of sections of this audit that you need to look at. And one of the very first ones you need to look at are you need to find the findings. The findings are where you see narrative written about things that the county needs to improve on. Here's where you're going to see things like the bank statements haven't been reconciled in 5 months, or the receivables haven't been collected in 6 months, or I've even seen a comment that the finance person doesn't know what they're doing. And it was pretty much about written quite that elaborately. And everything in between. So the findings are an important thing to look at. But the ones that say repeat are the ones you definitely need to pay attention to, because that means they were there last year, nobody did anything about them. Now they're here again. So why aren't they being handled and why aren't they being dealt with? Those are the things that you want to take a look at. Now, if you get significant amount of federal money, maybe federal money passing through the state to you, then you're going to be required to have what's called a single audit, which means your audit fees are going to be a little bit more when you actually do that. One of the questions I always get is, how often should I change auditors? Well, you should change auditors when you're unhappy. Typically, if you are doing an RFP for auditing services, you try to do that RFP, that request for proposal and selection process, you try to select about every 4 to 5 years. Just because you do an RFP doesn't mean you have to change auditors. You may be happy with your auditor still may turn in the best bid, still may turn in the best fee, still may be the most qualified, and you want to stay with them. So that is totally up to you. But there is a resource on the Department of Audit's website. In the event you want to do an audit RFP and select your auditor, on the Department of Audit's website, they've got a Word document that has an RFP that you can actually send out if that's important to you. Auditors have various degrees of technical ability. When I interview auditors, there's a couple of things I make sure of. One, make sure they're licensed in the state of Georgia. You'd hate to pay your audit fees and find out they're not licensed in the state of Georgia and you have to have your audit redone. Secondly, I would make sure they're in good standing. They don't have anything that, like attorneys have situations, if they get into trouble with things that they do with their clients, so do CPAs. So I would make sure that they don't have any determinations or findings against them. Then I would start to see how many other governmental clients they actually have, and I would make sure that they're staying adequately trained. And then the last thing I would probably ask them is, what audit clients have you lost over the last few years and why did you lose them? So that you know why they've lost some of their clients and maybe what's gone on. And that will help you assess in their reference. And you should do reference checking on your auditor. You should call folks and kind of talk to folks that use them and see. Couple of things. I'm often asked what happens with, how do you know things are kind of going right or not going right? These are some of the key areas when you see findings or when you hear rumors or rumblings that these things aren't happening. These are when you need to kind of take a closer look. Bank statements must be reconciled monthly. And if they are not, you do not know that all of your activity is being recorded. They've got to be reconciled timely. They can't be reconciled 12 months at a time. They need to be reconciled every month. If you have a billing function in your office, the commissioner's office, you want to make sure whoever bills and whoever adjusts and whoever collects is a different person, if that's at all possible. Utilizing people in other departments if you have to. That will help you to try to prevent theft from occurring. So it's extremely important. If you have finance folks, you want to make sure that you train them as quick as you can and continuously train them and keep them up to date and up to speed so that they can make sure they are doing things correctly. We've already talked about those findings. Go and look at those findings and understand that balance sheet. Go to that Finance 2 class with ACCG and bring your audit and try to understand and ask your finance folks, if you have one, a question, or pull on resources. And then also make absolutely positively sure that there is no rumbling of payroll taxes not being paid. Because if payroll taxes are not being paid, it will catch up with you very quickly. So you want to make sure those kind of things aren't happening. So your journey in elected office is beginning. You've got 4 years at least, right? If you make it, right? And at the end of that 4 years, here's the question. Is the county better off financially than when I arrived on the scene? And if the answer is yes or no, you've got to decide right now, you can't do everything, but what are you going to try to do to move it forward in the right direction? Okay? That's kind of, and you're inundated and overwhelmed right now with just tons of information coming to you. So you've got to kind of go back and digest it and sort it through. And that's why you have resources that you can call back on and ask questions. But I hope you enjoy your journey, and I'll be around during your next break in case you have detailed questions. Mr. Murray?